Remember Bitcoin? That weird internet money everyone was talking about? Yeah, it's back. And this time, it's brought friends. Cryptocurrencies like Ethereum, Litecoin, and Dogecoin are all part of the gang now. The price is surging, graphs look like rockets, and everyone's scrambling to figure out if this is the future of finance or just another bubble about to burst. Experts are divided, with some predicting a new era of digital currency dominance, while others warn of an impending crash. Buckle up, because we're diving into the wild world of Bitcoin. It's a roller coaster ride of emotions, with highs that make you feel like a financial genius and lows that make you question your life choices. Now, I'm not a financial advisor, I don't have a crystal ball, and I certainly can't predict the future. In fact, my knowledge of finance can be summed up with buy low, sell high, and even then, I usually screw it up. The world of cryptocurrency is a maze, and I'm just trying to find my way through it, like everyone else. But here's the thing about Bitcoin. It's confusing, it's volatile, and it's absolutely captivating. It's like a puzzle that you can't put down, even if you don't have all the pieces. It's like watching a financial reality show where the stakes are incredibly high and nobody knows what's going to happen next. Every day brings new twists and turns, and the drama is real. Whether you're a seasoned investor or a curious newbie, Bitcoin has a way of drawing you in and keeping you hooked. Big money loves Bitcoin. But why is that the case? What is it about Bitcoin that has captured the attention of the financial giants? So what's fueling this Bitcoin bonanza? Why is everyone suddenly so interested in this digital currency? Well, picture this. Wall Street, a place that loves nothing more than making money, suddenly realizes this whole Bitcoin thing might actually be a big deal. It's not just a passing trend anymore. Institutional investors, those guys with more money than sense, or maybe just more money, are starting to dip their toes into the crypto pool. They're not just curious, they're seriously considering it as part of their portfolios. And these aren't your tech-savvy nephews throwing their spare change at Dogecoin. These are seasoned investors, the big fish in the financial sea, who are now eyeing Bitcoin. We're talking major players like Tesla, Square, and even some old-school banks. These companies are not just experimenting, they're making significant investments. Why? Because Bitcoin is scarce. Unlike traditional currencies, which can be printed endlessly, Bitcoin has a hard cap. There will only ever be 21 million Bitcoins, and that finite supply is making it attractive as a hedge against inflation. This scarcity is a key factor in its growing appeal. In a world where governments are printing money like it's going out of style, something that's demonstrably scarce starts to look pretty good. Investors are looking for stability, and Bitcoin offers a unique form of it. Moreover, Bitcoin's growing acceptance in everyday transactions and its global reach are adding to its allure. It's not just an investment, it's becoming a part of the financial ecosystem. As more industries integrate Bitcoin into their operations, its legitimacy and value continue to rise. The future of finance might just be digital, and Bitcoin is leading the charge. Bitcoin's got that shine. Now, you'll hear people call Bitcoin digital gold. But what does that really mean? Is it really though? Gold's been shiny and valuable for centuries, used for everything from jewelry to fillings in your teeth. It's a tangible asset, something you can hold and feel. Bitcoin, on the other hand, is basically just lines of code. It's a digital construct, existing only in the virtual world. But here's the thing. Bitcoin shares some key characteristics with gold. It's scarce, it's divisible, and it's decentralized. And it's relatively easy to transfer. You can send Bitcoin across the globe in a matter of minutes, something you can't do with physical gold. You can't just magically create more Bitcoin, just like you can't wish a gold nugget into existence. Both require effort and resources to obtain. And while you can't exactly wear Bitcoin on your finger yet, its digital nature makes it easier to move around than a truckload of gold bars. Imagine trying to transport a ton of gold versus a digital wallet. This has led some to see Bitcoin as a potential store of value, a safe haven asset in times of economic uncertainty. Just like gold, people turn to Bitcoin when traditional financial systems seem unstable. So, while Bitcoin and gold are fundamentally different, they share enough similarities that the term digital gold starts to make sense. Both have their unique advantages and challenges, but in the end, they serve a similar purpose for many investors. And the world is watching. El Salvador made headlines by becoming the first country to adopt Bitcoin as legal tender. Now, whether this was a stroke of genius or a recipe for disaster is still up for debate. But it certainly put Bitcoin on the map and sent shockwaves through the financial world. Other countries are taking a more cautious approach, exploring central bank digital currencies, CBDCs. Basically, government-backed digital versions of their existing currencies. The race is on to figure out how to regulate this new asset class, with governments grappling with the potential risks and rewards of this decentralized financial revolution. Section 5. India and Bitcoin, a complicated relationship. Now, let's talk about India. India has a long and complicated relationship with money. We've seen demonetization, we've seen gold bans, and now we're navigating the choppy waters of cryptocurrency. Back in 2017, the Reserve Bank of India effectively banned banks from dealing with cryptocurrencies. It was like telling your friend they couldn't come to your birthday party because they were wearing the wrong shoes. But then, in a landmark 2020 decision, the Supreme Court of India lifted the ban, saying it was disproportionate and stifled innovation. This was a major win for the Indian crypto community, and it opened the floodgates for investment and adoption. Section 6. The crypto question mark. India's regulatory tightrope. But hold your horses, because things are rarely simple in India. The government is reportedly working on a new bill to regulate cryptocurrencies. Will it be a warm embrace or a regulatory chokehold? Nobody knows for sure. Some say the government is looking to create a framework that fosters innovation while protecting investors. Others fear a repeat of the 2017 ban, pushing crypto enthusiasts into the shadows. This uncertainty is a major hurdle for the Indian crypto market. Businesses are hesitant to invest, individuals are wary of participating, and everyone's just waiting to see which way the wind will blow. Section 7. Bitcoin. Bet. Potential wins and losses. So, what's the verdict? Is Bitcoin the future of finance, or just another tulip craze waiting to wilt? Well, like any good investment, or gamble, depending on your perspective, there are potential risks and rewards. On the one hand, Bitcoin offers a decentralized, borderless, and potentially more inclusive financial system. It could empower individuals, reduce reliance on traditional financial institutions, and even help the unbanked access financial services. But on the other hand, its volatility is enough to give even the most seasoned investor heart palpitations. Section 8. The future of money. Or just a fad. The future of Bitcoin, especially in India, is uncertain. Will it become an integral part of our financial system, or will it fade into the annals of remember when stories we tell our grandkids? Only time will tell. But one thing's for sure. Bitcoin has sparked a conversation about the future of money, and that conversation is only getting louder. So, there you have it. The wild, wacky, and potentially world-changing world of Bitcoin. Is it the future of finance? Maybe. Is it a risky investment? Definitely. Is it fascinating to watch unfold? Absolutely. Now, if you'll excuse me, I'm going to go check the price of Bitcoin again.